Hello, everybody. Thank you for joining me. My name is Stephen Choi, and this is Trading with Livevol. This is where I trade my Reg T account, and I use LVX to trade. And you guys can see how I use this trading platform to trade and make my trading decisions. I actually skipped Friday. Sorry about that. I got caught up in meetings. I had meetings like right at 10 o'clock, so I wasn't able to do any. But in the future, I'll have, if I'm not on, some of the other guys that are on the community will be broadcasting instead of me. So just so you guys know, going forward. Ooh. Again, I think yeah. All right, sorry about that. Again, I tend to do that. I've gotten a lot better, but looks like I still left it open. So let's actually go to my account. So I'm pretty flat today, nothing too much. There have been something interesting. So I know I talk about Zynga all the time, but basically it's the only position left that really is this April 19 position, and basically it's I'm just gonna leave it be and see how it goes. You know, I was bullish, but it just keeps going down. There's nothing really I can do, and instead of risking more, I'm just gonna kind of live with this position, and that's about it. But as you guys know, I look at these watch list trades and I try to see kind of what's happening, right? And there were some interesting stuff of note. So what I did notice was there was a lot of call buying. So you see how like in this watch list right now, I only have like 1,000 starting at 103. It's because I just logged into this account. So in my other terminal that, you know, on my desk, I have this running all day, and then I can kind of see what's ticking. And I thought it might be interesting just to kind of go over a lot of the block call trades that I've been trading, even though, you know, so that's not the only one that's trading, but it just kind of piqued my attention because there's so many of them. So first one, let me actually just go through them, is AAL, American Airlines Group. So I go to the stats tab. You see how the calls are trading 2-to-1, but you see 1,600 of the May 36 calls traded, right? The IV is at basically 87 percentile, so it's pretty high. So just buying these calls seems a little risky. And then they have earnings April 24th before market. So these options are earnings related. But if you look at the chart, maybe you see a little bounce. The vol is pretty high. But I think the way the vol is actually being calculated is after this this merger that happened, right? So the length of time that it had to actually calculate the IV30 wasn't that long. And let's look at the option that they bought, which is the May 36. These options right here for 120. So we'll see. So if you look at all these others, I'm clicking on it real quick. So what I'm doing is I'm clicking on all these, right? So when you see all green, that means people are buying. So, you know, generally people are buying these options in May in American Airlines Group. And to me, it just piqued my interest just because, you know, I do some traveling and I noticed that the airlines are kind of packed, and the prices that I used to get, I'm not getting anymore, and they pretty much charge for every little stuff out there. So I think that's, you know, it's not that great if you're a traveler, but I think it's pretty good if you are the airlines. So from my personal experience and just the fact that, you know, the chart looks that way and the order flow, I thought it was pretty interesting. Let me go to CX, and I'm gonna kind of go through these pretty quickly. The general theme is that there've been block call trades. So you see this April 13 calls. I look at the chart. It looks like maybe it's bouncing off some support. Look at the stats. Looks like it's on the 28th percentile, and they're buying the April 13th, right? So basically these calls right here. Look at the options, 6,000 of them. The important note is if you click on it, you see this open interest really hasn't gone up, even though they've been trading a lot. So you're not really sure if they're opening or closing this position. They could be actually closing it. So it's not as obvious as a buy, but I thought I should mention it. Next one is HIG, Hartford Financial. Let's look at the stats. You see all these calls being bought. June 36 calls are the ones that people are targeting. The IV30 is on the 44th percentile. So what the IV30 44th percentile means is this IV30 is similar to the VIX on the S&P 500, but we actually do it for each individual stock. So this means in the past 52 weeks, it's at the 44th percentile of the IV versus, like, so if I actually click on it, you can see it's like pretty much right in the middle. Although in the past 6 months, it's if you kind of compare in the past 6 months, it's kind of relatively in the high position. But you can see that people are buying options, and the ones that they're buying is the June 36 calls. Right, so also from a support, June 36, 2,500 so far traded, and then you can see if tomorrow the open interest goes higher or lower. So that's Hartford Financial. Let's go to Coca-Cola. Coca-Cola actually has earnings. Looks like tomorrow before market. So if you look at the stats, the calls are outpacing the puts 2-to-1, and the two that people are buying are the August 41 and the June 39 calls. Let's go to June 39. Looks like people are buying these, and then August, they're buying these. So let's actually see if there's open interest. See this open interest, this blue line is increasing. Let's go to June. This line right here, I click in the middle. I look at the open interest line increasing. So both of these open interest lines are increasing, right? So that means people are opening orders. The calls to puts is 2-to-1. The net delta is bullish, and the premium is buying. It's relatively low, 27th percentile. So I'm going to click on the chart. If you look at the red line and I go click on 1 year, and we're right here, it's at the 27th percentile. So it's pretty low for something that has earnings coming up. Maybe it's pretty well known. And to me, the chart isn't necessarily bullish or bearish. Looks like it's more in the consolidating situation, which is why maybe possibly people are buying June and August. A lot of times, if I do believe that Coca-Cola is going to go up, I will actually piggyback these calls, right? So the June, I might piggyback these 39 calls, and then maybe I'll sell something like the April 39 calls, right? Or the April 39.5 calls. So I'll do some kind of vertical time spread. But I'll try to finance my calls by selling something in the shorter term. So that's usually something I like doing. In this instance, maybe I'm kind of torn. It's not, let's see, May 39. So excuse me, I'm actually going through this right now, live, right? So I didn't really think about it before. Yeah, so June 39, if I think, you know, after earnings it's going to go up, I'm going to buy these maybe and then sell. You know, maybe these, the May 40s, right? So that way I have this call spread for 50 cents, but hopefully it goes up, right? So let's actually see if I can get something. Sell this. And then I'll be buying these to piggyback this guy, right? All right, so 50 cents is the fair value. Let me actually put that in. Not that I'm a big believer in this, but I generally like that spread, and I kind of want to show you guys how to actually identify a trade, and then you can kind of take out one of your playbooks that you use or like, and then you execute the trade on it, right? Let's look at HTZ. Okay, Hertz Global, also bullish order flow. Although this just came in, looks like that's a sell, but all I was seeing was these. So maybe people are buying these and then they're selling the Aprils, kind of like stuff that I like doing, right? So they're buying the Junes, 27 calls. You see the percentile IV30 is 53. I look at the chart and maybe it's just kind of grinding. It's just consolidating. And I see that people are, they sold these, right? So they sold these for 15 cents. Looks like their earning is not until basically later April, and people are buying June's. So it's ironic, but I just did that Coca-Cola trade, but this is almost identical. The only thing I would watch for is whether this open interest is opening or closing. But it looks like people are kind of piling on. So tomorrow, if you see that how the open interest is 5,000, if you see like, you know, higher than 5,000, then you know the guy was opening. If it's lower than 5,000, then you know it's not as good, right? So the guy's closing. But if you look at the stats, he was paying 130 and 135 and selling these for 15, right? So if I click on this, sell, oh, let me do complex. So I'm selling these for 15 and buying these for 130, right? So which is 115. So let's say, you know, I like that trade. I want to piggyback it. I'll send that one lot, and boom. So there's another one lot right there. Okay. Oh. Yeah, so it looks like I got filled. So I bought one for 125 and I sold this for 15 cents, right? So basically I got it for 110 or what did I get it for? 112. So I got it for 112, better than what I put it in for. So we'll see what happens, right? Hopefully it'll go up a little and then I can make some money. Okay, so next one, OCN. Owens Financial Corp. I actually never traded this before. Financial company is engaged in servicing organization of mortgage loans. Okay, so another mortgage loan provider. I look at the chart. Looks like it's been kind of consolidating. IV30 is at the 53 percentile, and looks like this guy, they're buying the May 45 calls, right? The 45 calls is way up here. So that's a pretty decent move. Let me see. Yeah, so they're basically buying these. Looks like the earnings is May 1st before open. It's one of the things that's very cool about this software is they'll actually tell you, embed the earnings in the option chain, so you know what's happening. So people generally been buying. You can see the open interest is only 67, but OCN Financial Corp looks like 2,000. Most of them is buying. I look at the stats. The calls outpace the puts, and if anything, looks like they are now selling the July 50s and the 45 calls against it. So I don't know what the exact reasoning behind this is, but they're buying the Mays, selling the Julys. As a market maker, as a professional, this kind of trading is like I used to do quite frequently, but if you have a Reg T account, basically you can't do that really. So that's that and OCN. Let's check out GLW. Yeah, so I saw this print go up. I didn't see this print go up. So this kind of seems like it's more of an even. In fact, that thing tilts it more to the put side. Corning Incorporated. Yeah, we'll see. People are buying puts. Same thing. You look at the stats. The percentile is pretty high, 67 percentile. If you actually think it's going to go down, and the earnings are April 28th, basically you would try to piggyback some sort of a trade that mimics that. Mimics this trade, right? So this guy's. The funny thing is they're buying the April 19 expiration 21 puts, which basically expire before the earnings announcement. So if people think it's going to go down, they definitely think it's going to go down soon, and then they're buying the later on calls. So maybe if it doesn't go down in the next couple of weeks, or next 5 days actually, or 4 days, because Friday is, it's a holiday. Basically, these are kind of worthless, right? So they're buying in the money option, which is okay, but basically they're betting that it's going to go down, right? So this is the 5-day tick chart, and they're saying, boom, it's going to go down further, and that's what people are betting. Don't know too much about it. I remember way back when Corning used to actually make like kitchenware, and then basically with the internet revolution, they started making those glass wires. XOM, okay, looks like they're buying calls, right? May 100 calls, 55 percentile on the IV30. Looks like basically they're relatively bullish bets. Let's actually look at the chart. Maybe you can say it's gonna trend back up, and people are buying the May 100s, right? So let's actually go to May 100s. Yeah. The only thing is, you see this open interest is 33,000. So literally like 3,000 could be nothing, right? Doing 10% of the open interest doesn't really mean anything. Although, let's see, you see April 9th, they did 26,000 on this stock. So like, you see how I got that by clicking on this middle, right? Now, if I want to investigate what happened on April 9th, this is how easily you do it. You go to the chart, you actually go to April 9th, and you click on this bar. So when you click on the bar, it'll tell you all the biggest trades. So you see 21,000 of these traded for 67 cents, and basically it was 66 bid at 70. So you can't really say for sure if it was buying or selling, but most likely it was selling. And if they were, maybe they were doing it with stock, because the stock has gone up since April 9th, right? But it's kind of a really good way of investigating. So to me, these calls aren't the May calls aren't as significant, because they already traded for 67. You don't know if they bought it or sold it, but they basically traded for 67 cents, and this open interest was created just a few days ago. So we'll see if XOM is going to go up. The next one is AT&T. So AT&T, I look at the stats, and they're buying these May 37 calls, right, for 15 cents. The IV30 is at the 40th percentile, more calls to puts, obviously. I look at the chart, very similar to most of the chart, but what they're buying is the May 1737 calls, right? So let me actually go to 37 calls, and they're doing 10,000 of these. Now you see how there's 10,000 already in the open interest? Not clear if it's closing or opening, but you do know that basically you see how this open interest was 4,100, and then it went to like basically 10,000 when they traded what, like 6,200 contracts, and basically they traded it for a similar price as it is now, right? So we'll see what happens, but you can see that it traded. You look at the chart, same thing. They're paying for calls that are way out of the money, and this stock, if you look at the IV30, it doesn't really move that drastically, right? So they're buying calls way up here, so you have to have a pretty big move up for that to come in. The last one is MU. I look at the stats. Looks like they're buying a lot of these July 27 calls for 41 cents. The other ones are like kind of buy right, but pretty much 2-to-1 calls. They're selling some premium and getting long, right? So July 27s, if I look at it, yeah, so they're buying 12,000 of these. Traded so far. We'll see what happens. I look at the chart. Same thing. Looks like maybe it might be, if it is market is bottoming, it's probably going to go up, and maybe people are taking more shots with the options because you have calls, so basically you have limited downside, right? So maybe this is the perfect time to take your shot at some calls because the market is either going to bounce back up or going to go straight down, and this IV 30 is really low. I actually have a position in Micron. I bought these, the May 1720 calls, for 287 because I kind of like the risk-reward ratio, right? So basically I thought 20, there'll be a lot of support at 20, and the chance of it going to around 25 was pretty decent. So I basically piggybacked that trade. So far it's losing, but we'll see how it goes. So that was kind of just a short little run through of all the order flow that I saw, right? So, and basically I followed the Hertz. I have still the Coca-Cola working. I'm gonna look at the Hertz. I kind of like that trade, but I don't know if they're expecting some news. So I don't really know anything about the stock. Plus, I need to check out tomorrow before I put on more because of this open interest. It could be actually reducing it. Then basically he's closing these, right? So other than that, I have my own trades kind of going. Let me actually, in Apple, basically I still have this spread, which now I'm just pushing at this moment, really. I'm like slightly down on this spread, so I'm kind of hoping that Apple rallies to 530 by end of this week. But right now, it doesn't look like they're doing too much to give me too much confidence. But, we'll see. I think there's more upside than downside, and I have these bets on from prior, so I'm just going to keep it. So this is bets I put on when I had 50 in my account, and now it's a lot less, so I probably wouldn't do this now, but for now, it's already in there, and I still believe it, so I'm going to keep it. The other one is Splunk. So I did this 65 spread, right, for $1.90, the April-May. Similar to like pretty much a lot of the other trades I'm doing. I bought this, sold this. Looks like these are going to pretty much expire worthless, and these are still worth 280. And the stock essentially, I think, actually went down. Yeah, so I think I put it on like somewhere here. I'm not sure, but I think it might be down like $2 since I put it on. But because these decayed so quickly, I actually am up right now. So at the end of this expiration, if Splunk goes up, uh, you know, either I can just sell this out and get profit, or maybe I can ride it naked. Now, usually I would sell enough to basically break even no matter what, but since I only did a one lot, really can't do anything about it. So it is what it is. But this is the kind of trades that I think is very useful. I'm kind of learning that maybe this is the way to go for me with the Reg T account. But right now it's too early to say like these are the trades that I should do. I do like piggybacking trades, and maybe that's what I should try to kind of focus on. So Micron was another one. What's another one? ACI. So as you guys know, that's a long-term one. I have this call spread, the October 6, 8. I also have DLR, DFC Global. They're still in some admired and controversy. So I told you guys how in these takeover stocks, when there's still some controversy, I like to buy the back months and sell the front month, and hopefully you kind of just get away with it and they don't settle anything. And even if they do not settle anything and it doesn't go through ultimately, these vol are so low. And let me actually show you. You see how low it is? If it goes back up to the 60, 70 range, these back month options will explode. So that's a trade that I usually like putting on. I just put it on, and if you get one hit, that could pretty much pay a lot, and it's a pretty good, and you risk very little to put those kind of trades on. So what's another one? I think that's it. I think I had the outer. I don't know if you guys remember, but I had this spread on an outer where I sold the 65.55 put spread for 350. Right now it's kind of dangerously close to being in the money, but I'm risking 350, risking 650 to make 350, and my belief is they'll trade higher than 65 because they were willing to buy 20% of the company for $66 and change. So I'm gonna basically go with that thinking and piggyback that trade. So that's one. So I still have a bunch of positions on, and I'm normally I'll probably be buying more calls, being much more aggressive on the call side, but right now my account doesn't really support it. So I sold the April Strangle in Alcoa, which worked out well. So they basically expired worthless, and now it looks like it's going back up. I like Alcoa too, just in general. So there are like certain stocks that I like, and some work out, some don't. But we'll see how it goes. Just in generally, if you look at, I look at XLF to kind of give me some guidance on how the market's going. So XLF probably sold out pretty harshly, which might make you think that the market is going on a downtrend, but this was kind of offset for me by, if you look at the emerging markets, they didn't really sell off. So usually I really haven't really seen it where U.S. market sells off and the emerging markets does not sell off, but it actually goes up. So if there was some real panic and the market was going to go down, my thinking was that emerging markets will go down, and then just generally the VIX. Like the VIX should have been at 20 already, but for whatever reason it wasn't. So this just kind of tells me it was controlled. It wasn't really like a panic. So you know, my thinking is like I use the VIX, I use a lot of the other indicators to kind of guide me on what's happening. And to me, there was like too many things that pointed to the fact that um, it wasn't really like a panic sell-off. And let me actually look at I showed this to everybody a lot. If I look at the monthly on the SPX, basically nothing has changed on this trend, right? If you look at the weekly, pretty much it's at the support. But really, if you look at this, and then let's say we go back up, nobody will even know what happened here, right? So this whole thing about like everyone on CNBC talking about this like whole crash and 10% correction, like this isn't a 10% correction. Like normally, like you shouldn't even notice until it gets to like 1750, right? At that point is when you're like, oh, okay, well, it's actually gone somewhere where it hasn't gone since 2012, and that's when you can actually realistically assess if the market is actually turned over and is actually on the way down. But having it just go down here, this is like same as every other time this whole past year, and then the markets rallied. So if you actually thought every time in the past that it was going to go down, so all these pundits who comes on TV saying like, yeah, we're going to have this massive sell-off, well, you would have been wrong, and the market's gone up 30% since they actually said that, right? Because they were saying that since the whole European crisis with Greece, how this whole market is going to come to fruition and crash. And so far, I haven't seen it. And not that I don't think it's going to happen. It most likely will happen, but what you're trying to figure out is when, right? And to say that it's going to happen now is kind of crazy talk to me. So we'll see. I'm going to stick with the trend for now until I see otherwise. Now, one thing that is very important, and for you guys to understand, is when the market does decide to go down, you can make a crap load of money by buying puts. I mean, like more money than ever than you can buy by buying calls, right? Except for like during 2000 or 1999 with the internet stocks. Other than those days, you're gonna make a ton of money when the market goes down. And for myself, I made a tremendous amount of money during this time right here, because basically, you know, those puts, not only are you betting on the downside, so you make money on the delta, but the volatility explodes when you do this, and you stand to gain like massive amounts of profit. But is that going to happen now? I'm not sure. I usually like to wait until like it's broken. You see how this trend here from 2003, it really didn't break until like this happened, which was from 1600 down to 1322, right? So that's a good 20% move. Until that happened, basically the bullish trend was still alive. It's when this happened that now you're waiting for it to bounce so you can put it on again, right? So each time you have to assess the economy as well. You can't just use the chart. But to me, when this happened right here at the beginning of 2008 was the first sign. It gave me indication that the market was ready to like crash, right? Because it basically broke through everything. And at this time, you saw some real fear. And then people came out and said, oh, this is a great time to buy. And this is what people have been waiting for, this pullback. But everyone knew, if you really studied, that something was really wrong with the market. And every insider was basically selling on every rally, right? And people buying just a ton of puts. So when you guys say like, hey, you know, I might miss this downward, yeah, you're not going to miss anything. Basically, you shouldn't even actually think about it until we actually get past the 1650, and then you wait for a bounce, and then you slap on the put, so for the market to go down. So you know, this could have been one of those days too. So this you probably got crushed, right? Because you were probably waiting for the bounce to short, and then basically the market went up. So it's not 100% foolproof, but every time it really, if you're really going to have a crash, really it doesn't happen with one long candlestick, but it happens like as as a step. So it goes boom, 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 like a bouncing ball, and you just have to recognize that it's here. Right now, I don't see that, so I'm gonna stick with being bullish until that happens, and then when they do, then you can be bearish and try to make some money that way. Other than that, I hope your trading goes well, and remember that this Friday is a holiday, so your expiration Friday is actually Thursday. So don't forget that if you need to basically roll or close your position for this month, you have to do it by Thursday. All right, take care, and I'll talk to you guys tomorrow.